Let's dive into some of the analysis of all the keynote addresses that we've been hearing for the last 2 hours. Let's start with what we heard from Ray Dalio. We have a clip on cycles.
We know we're going to need a lot more money, a lot more debt, and this is all the cycle. You need the more money, you have to print that. You need more money, so taxes go up, and that produces the dynamic. Now, I can keep going on about what happens in that dynamic. It may be capital controls. You start to go to things where that money wants to go someplace, and it goes to almost anything else. Particularly at all that time, I learned in 71, painfully learned in 71, that it causes like stocks to go up. It causes everything. We can deal with the mechanics of the stocks, gold, Bitcoin, real estate, everything to go up because it's really going down in dollars. And that's the part of the cycle we're in.
So, Lawrence, we're hearing from Ray Dalio talking about the cycles of currency supremacy, and inflation seems to be a theme here, right?
Yeah, two types of inflation. The way he sees it, of course, it's a supply and demand inflation, as he says, which is that there's labor demand and high capacity, and capacity is low, and then that forces prices up. But then also you have monetary inflation, which is essentially central bank money printing. And we're kind of seeing both happen right now during the recovery. And the other thing, too, of course, with the printing of debt, you have, as Dalio points out, all that debt, essentially, when you think about it from the bigger picture, it's a claim on real goods and services of a country. And, of course, that's what the U.S. is doing. And in many ways, there's a saying, it's like the use of debt for an economy is much like alcohol. It's a short-term stimulant, long-term depressant. That's the case here. Everyone, the party goes very short time, but boy, that hangover lasts quite a lot longer than the partying. And that affects essentially what will happen with the dollar, because long-term, those dollars, those debts that essentially is basically backing up the dollar, they'll get called in. Now, back in the 70s, in the late 60s, the U.S. ran up a hell of a lot of debt, and back then the dollar was backed by gold. The stocks of gold in the vaults essentially went from the government went from 20,000 tons down to 10,000. Half the amount of gold. It was gone. It was taken. And this time, of course, it's fiat currency, so it's a different story. And this is happening at a time when China is becoming more supreme.
Yeah, so, and he reiterated his whole cash is trash commentary, with incredible debt and incredible credit being created. It needs to be paid back at some point, and it's going to be more difficult with time. And on that note, he said something that was very impressive during mid-interview. He owns some Bitcoin. In fact, we have a clip on his...
He said it!
Yeah, go ahead, Lance.
Yeah, go. Yeah. No, I was going to say, he said it the way you would say, like, I had bagels in the morning. If you have a clip of it, take a look.
Yeah, I think Bitcoin's greatest risk is its success. Because as it becomes more, right now, it's not such a big deal. And, fighting it is more of a big deal. And that's it, because it's not that big a deal. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin. And they want to do that in a bigger way, like buying gold or something in a bigger way. And then there's more transaction. They lose control over that. And that's an existential risk.
So we have the founder of the world's largest hedge fund saying that he owns Bitcoin. Not only that, he'd rather own Bitcoin than government bonds, but then going over that there are some risks.
Yeah, it was a throwaway. In many ways, it was just, those were two throwaway lines, but in many ways, it was like, wait, what? Ray Dalio owns Bitcoin? Hold on, what? Did he just say that? Did I hear it correctly? Had to rewind and listen to it again and again. It was actually in the middle of a conversation with Michael. In the middle of the conversation, he just does it. Yeah, I own Bitcoin. It's like, what?
Of course I do. Just slip it under the rug
it's like
there.
that, you know? I'm wearing brown shoes today. Oh, okay. I have some Bitcoin. I'm wearing brown shoes. It's like nothing. But yeah, he also said this when he said that whole thing about he'd rather own Bitcoin than bonds. It was actually what he was saying was actually something pretty scary, and that is that if people who own Bitcoin, if you have bondholders start to shed their bonds, start to sell their bonds in favor of Bitcoin, for instance, because they view it as maybe even a safer investment than bonds. And then that's when he said, oh, yeah, I'd rather have Bitcoin than bonds, and then just kept going. I mean, it might have been he might have just said that jokingly, but he does own Bitcoin. Yeah. And it's this whole idea that, like, that's where government would ultimately step in and start to regulate. And we think, well, Bitcoin can't be regulated, but who can be regulated? People who live in countries that are run by governments. They can be put in jail. They can be taxed. They could a lot of ways to get them to get it done.
Emily, anything that caught your eye?
Yeah, I mean, just to underscore that point, I think he really emphasized this idea about why governments see cryptocurrencies as a risk, because it is a currency that they can't control. And that is something that's going to come up again and again over the next few days, are government's attempts to sort of, reclaim the narrative by issuing central bank digital currencies.
Yeah, and on a last note on Dalio, he had a rather grim view of the future, that we're headed to the 30s and 40s in terms of cycles, and we know what happened then: conflicts over wealth, over power, world war, currencies were wiped out. A very frightening prediction, forecast for the future, if you will. But there was a silver lining that Michael tried to bring out there, was that as this incredible debt and credit is created, that it could perhaps soften the blow if we have greater productivity in the form of technology. So, I hope the world doesn't end. But that's of course a big if, and that requires perpetual creation of technology. I mean, look, and this was part of the point of the conversation, was they were saying things like, you think about your cell phone, all the pictures it could take, for instance, and all the things that a cell phone can do, that 30 years ago would require all, there's that famous meme going around where it shows an ad from one of these electronic music stores like Radio Shack or whatever. And everything in that ad is now on one cell phone, such as a camcorder, such as a music player, etc. So that doesn't necessarily get reflected in productivity numbers that are printed out by the governments. But there is an amount of productivity that can fight that kind of dread scenario. Yeah. So it remains to be seen. Yeah, we also, our first guest to kick off the conference was Dr. Lael Brainard, and she was talking about CBDCs, and the Fed has been working on the digital dollar project. We have a clip. Let's have a listen.
If stablecoins were to be widely adopted and served as the basis of an alternative payment system oriented around new private forms of money, there's a real risk that you could see fragmentation of the payment system, and that you could see consumer protection and financial stability risks because of the risk of run-like behavior. And so I would just hearken back to that period, the free banking era in U.S. history, when the inefficiency, the fraud, the instability in the payment system that was associated with active competition among issuers of private paper banknotes led to what eventually was a uniform form of money backed by the national government. So that is, I think, a prominent consideration as we think about a system oriented around private money and a digital payment system oriented around what is essentially public money.
Mm-hmm. All right. So, Emily, we heard from Dr. Lael Brainard about stablecoins, central bank digital currencies. The Fed is releasing a white paper next quarter on a potential digital dollar. They're stepping up engagement with the public, with the stakeholders on what that will look like. They'll talk about data, payments, privacy. What did you get out of Dr. Brainard's talk?
Yeah, you have to read a little bit between the lines here. So there's a few significant things. One, we know for sure now that the government and that the Fed is taking the idea of a digital dollar very, very seriously. And this wasn't always totally clear, right? Because we have central bank digital currencies are sort of popping up all over the world. China's leading the pack, and the U.S. has been taking a much more measured approach and saying, okay, we're going to do this, slowly and cautiously. But clearly, we can see that this is something that is being very actively considered. So I think what was interesting about these remarks is that it highlighted a tension between central bank digital currencies and kind of more decentralized cryptocurrencies like Bitcoin. These comments about private money and also, there was definitely a warning in there, I think, about stable coins, saying that, these are not legal tender, they aren't necessarily under control. So it was sort of presented as this idea that central bank digital currencies are, a more controllable form of money. They're a form of money that a government can, maintain their control over. And I think that's interesting. So.
Okay. And we also heard Dr. Brainard talk about Bitcoin itself. Let's have a listen to that.
What is your view on the regulatory framework for cryptocurrencies like Bitcoin? I mean, is it sufficient as it is now? Does it need to be more regulated, less regulated? How do we allow it to flourish, as you just said?
Yeah. So with regard to crypto assets generally, I do think it's very important for the regulatory framework to evolve. Now, obviously, that crosses boundaries. A lot of that sits with some of the other regulators, but having a shared. All
right. So, any thoughts on Bitcoin? They're looking at it from the regulatory framework. It didn't seem that they were too negative on Bitcoin, but just allowing it to evolve.
Yeah, I wouldn't read that as negative exactly, but
no one really knows yet where it belongs. Is it the CFTC? Is it the SEC?
They're still figuring out the pipelines work.
Yeah, whose job is this? Is it the Fed? Is it the nobody knows.
All right. We also heard from Gary Vee. We always love Gary Vee. He's a frequent guest on CoinDesk's. So he talked about the NFT marketplace and how it will evolve. Have a listen to that.
You've had the market say, oh, wait a minute. Everybody's going to have an NFT. There's going to be Pokemon NFT. There's going to be UFC NFT. There's going to be LeBron James exclusive at Novak Djokovic, the US Open, Budweiser, Nike. I view this like social media accounts. So I thought in 2008, and even going back earlier, but when I wrote Crush It, everyone's going to have a social media account because there's not going to be a reason not to. And if you read the early, Joe, reviews on Amazon of Crush It, everybody's saying the things they say about NFTs now. That this book's stupid. I'm not going to have one. I'm not going to have one. I'm not going to have one. And so I think people have taken in, oh, wait a minute, or at least the early movers and investors and traders have said, wait a minute, let me take a step back. I have to anticipate an extraordinary amount of supply, no different than social media accounts, Joe. You know how many social media accounts there are? That doesn't mean that Charlie D'Amelio and Logan Paul, you and your bro and others can't come across and do things and win. It just doesn't mean that everybody's going to win.
So this is a seriously social savvy internet entrepreneur. He's talking about NFTs, how it will change the world, and older generations that don't keep up will be left behind. He said the technology doesn't care about your feelings. What did you get out of that on his talk on NFTs, Emily?
He's very into NFTs.
He's very into NFTs.
Yeah, he's very pro NFT. I think that's the main takeaway. But yeah, I think one interesting thing that he talks about that he just mentioned that he also talked about on our show is this idea of how NFTs are democratizing the market, and just because you enter the NFT market doesn't mean you're instantly going to become an NFT star. You still need to use the same tools that you have in the real world, which like social media and building a following, or maybe having a following to begin with. And he's obviously someone who has that influencer following, which is clearly helping his NFT success.
Emily, are you saying that because you started an NFT and tried to sell it?
Yeah, because I'm competing with Gary Vee in the NFT.
She has a head start on us.